Trinidad and Tobago. There is no emergency drill planned for today. However, in case of an emergency, instructions would be issued over the public address system. We ask that you remain sides. Do not use the elevators. Enter the emergency stairwell using the emergency exit. Use the handrail and keep moving downwards where you would emerge onto St. Vincent Street. Give way to persons from other floors so that they can filter into the stairwell. Once outside the bank, go to the assembly point on the southwestern area of Woodford Square, where you would receive further instructions. Thank you.
Good morning again to everybody. Good morning and welcome. Welcome to the 16th floor conference room at the Central Bank. And let me be the first to wish you happy Christmas season. So notice we have Christmas colors and so on going on. Happy Christmas season to you and to your families. And thanks for taking the time to join us this morning for the 2018 Monetary Policy Report presentation. Let me just acknowledge the members of the head table. Well, these people are no strangers to you. There's Governor Dr. Alvin Hilaire in the center, and Garnet Samuel, who's our manager of the research department. And Garnet is particularly excited about responding to your questions later. So just so you know the format, it's the usual format. Governor will make a presentation, and we follow that with opening the floor, where you can raise your questions. You just come to the mic, raise your questions, and we will earnestly attempt to respond to all of them. So thanks again for coming. I want to acknowledge members of our board of directors. I mean, this morning we have about 3 or 4 of you here. Thank you for joining us. It means a lot to us. Thanks to you all, and warmly welcome the governor to the podium. Thank you.
Thanks, Nicole. Good morning, everyone. Welcome to a somewhat overcast and rainy day in Port of Spain. Special welcome to those joining us online. I hope you had a very hearty breakfast this morning, because we have a lot of material to cover. But our team tried to help you out, so you will see in your package all of the documents, the speech, the presentations, and all of that good stuff. And for those of you online, you can download everything. It's already online, so feel free to do that. So as I said, we have a lot to cover today. I'll be doing 4 different presentations, actually. The first is on the macroeconomic situation. The second would be on developments related to CLICO. The third would be on virtual currency and fintech, the central bank's statement on this. And the fourth would be on market conduct, our statement and our new guidelines on market conduct. So, brace yourselves. But before I get into the heart of the matter, I just want to commend our wonderful team at the central bank. This was really a major team effort to get everything together, and all the departments worked very diligently on the subject matters. So let me get into the story now. All right. So in your packages and online, you would see a first set of a PowerPoint presentation on the macroeconomic situation, basically our monetary policy report, which we launched today. And to make it even easier, we have the six summary points. So it would be basically 6 points that I'm going through. I will try not to spend too much time on detail on it because you could read it at your leisure, but just to give the flavor of it, and I'm sure in the exciting question time to follow, you would ask a few questions, and then also you could always feel free to drop us emails or so in case you have any things that you want to sort out. So the first point is on the international scenario. The main thing is that some fears earlier in the year have materialized, dampening the global outlook. Now, let me just reference the IMF's World Economic Outlook. So in May, as is traditional, the IMF does its economic outlook and then revisits that later in the year in October, November. And in May, there was the growth rate was projected for the world economy at about 3.9%. And on the fears of certain things, including trade problems, including normalization of the US monetary policy too quickly that could then lead to pressures on exchange rates and on interest rates in emerging markets and on capital flows. What has happened is some of these fears have materialized. So the outcome of this is that at the last meeting of the IMF in Indonesia, I happen to be part of it along with other people from the central bank as well as the Ministry of Finance, the IMF World Bank meetings, they talked about this and said, listen, some of these fears are actually coming to pass, so that the trade issues are now not just an abstraction, but things are actually happening, so they have to be very careful. The trade problems could then dampen the possibilities of countries using their comparative advantage to get the best out of their interaction with the rest of the world, and so this could dampen the global outlook. It could also lead to policy uncertainty and lead to frictions that could then affect people's confidence, investment, and so forth. So this is one of the things that have to be looked at, the trade issues. And in fact, when you look at the projections for the global economy, they moved it down from 3.9% to 3.7%. It doesn't seem like much, but it does put a damper to things. But overall, in any event, there is still a positive sense in the world today, and certainly with the IMF and World Bank, because when you compare it to the days of following the international financial crisis, things are much rosier, but there are certain risks that are there that need to be taken into account. So there is a complex geopolitical outlook that we have to be aware of, and it certainly will affect Trinidad and Tobago. So that's one of the first sub-points of this thing. The second thing is on the international stock market indices. For those of you who play the stock markets, but may not want to admit it, but you're playing the stock markets and you're watching, you're investing, you're trying to get the best deal, you would have noticed some volatility in stock markets over the last couple of months. Okay, so why is this volatility? It's very difficult to understand, because stocks are really supposed to be, in the long term, rely on fundamentals. You know, a stock is because it's the company, its fundamentals are good, so that you invest more, and so therefore it becomes higher in value. But guess what? If you have a news of something breaking, somebody says something, it might just make jitters, or you could have a situation where people say, well, the stock prices have gone up enough, so let me take my profits now. And so it may not be an indication that the stock is not performing well, but because it is, people say, well, it may not go on forever, so let me take my money now. And all of that leads to certain potential instability and so forth. So it's difficult to read it, but the fact of life is that it does happen. So if you look at the graph, you will see that from January 2018, it has been up and down. You had a kind of a booming period in the end of 2017 into early 2018, and then it's kind of all about the place. And see, if you look at the last shaded portion, you see that you have something going down. So the volatility in stock market has affected the short-term performance of funds with large equity exposures. One of the things that we have to be aware of is that we have a heritage and stabilization fund that is on the order of, at the end of 2017, it was 5.9 billion in value. By September 2018, the end of 2017, did I say 2018? Anyway, the end of 2017, it was 5.9 billion. By September, it had gone up to close to 6 billion, and now it has gone down to 5.8 billion. So it's something that we have to be aware of. There's not a reason to panic, because it means that the value of the stocks is different behind it. So what does that mean? If you, as the technicians call it, mark to market, you look at the stock prices have changed so that the value of your portfolio has changed. But this could always reverse in the short run. But there's something that we need to be aware of. Volatility in stock markets affect Trinidad and Tobago. Now, another thing clearly affecting us would be the energy prices. And we have seen, the good news is that energy prices have been trending up. And we've noticed even the budget numbers have been surpassed in actuality. So this is good news for us. And in Trinidad and Tobago, we welcome that. I was in the Caribbean governors meeting recently, and of course, most are seeing it the other way, because the other countries in the Caribbean are oil importers. So this is potentially good news for us, but we have to be careful, because if you look at the graph, you'd see this is the third one, chart 3. It is rising, but then right at the tip now, you see it's actually started to come back down. So it's something that is we have to be watching very carefully. So it had gone up to over $70, and it went down, back down to about $59, one of the last numbers that we have. And you know the complications with Saudi Arabia and so forth, and OPEC. So it's a very intense subject, and we have to be, since we are price takers, we have to be aware that the good things could end up not lasting forever. Just to wrap up on the international scenario, some of the things that we also have to be aware of would be the prevalence, or I don't know if it's the larger incidence of natural disasters. Certainly in Trinidad and Tobago, we have been awakened to our vulnerability in terms of earthquakes, flooding, and so forth. And you know, it is something that we need to be aware of, and it does affect insurance, it does affect a lot of things. I was in Indonesia, as I said, and they suffered not only earthquake, but hurricane and tsunami. So it is something that is engaging the minds of the world, and particularly in the Caribbean. And in, later this month in Washington, there will be a special meeting sponsored by the IMF and World Bank and the IDB on resilience in the Caribbean and so forth. So a lot of policymakers will be there. So that's the international scenario. What's happening on the domestic front? Well, the basic story is that after several years of contraction, the Trinidad and Tobago economy is poised for moderate energy-based recovery. How would this look, and what does it mean? First of all, if we look at the graph there, we would see that we had, and this is annual CSO numbers, you would see the large, the thickest line would be the overall GDP growth. And you've seen that it is either, in the last few years, either somewhere close to zero, negative, and so forth. So this is the overall scenario, and energy would have been the thin red line. The projections by the CSO and shared to some extent by the IMF, I think it's slightly lower, would be you'd have growth of about 1.8, 1.9% this year. So this is potentially a slight recovery from a deep situation that we had been facing. But what is this based on? It is based basically on energy. And on the energy side, the second graph here, you will see natural gas output actually trending up over the last several months. This is a 3-year graph. You will see that going up. This is the green line. And this is good news, clearly. You know about, I won't go into all this, about the juniper fields and so. And so natural gas-based recovery is upon us, and we hope that this would continue. Excuse me. However, if you look at the red line, you would see that this is crude oil production. You see that the news is not so hot because we do have maturing oil fields, and the trend is still slightly downwards. And if we look at the third quarter numbers, because we were looking at Q3 preliminary numbers, you will see that oil had declined by 11.3% quarter 3 this year over quarter 3 last year. Natural gas is up by about 1.2%. It doesn't seem like much, but it's because when you had the juniper start last year, it was already in Q3, so that the base effect means that it doesn't seem to be that much, but it is still important. And then let's look at what's happening with the rest of the energy sector. Petrochemicals production. One would clearly anticipate, and it has been the case, that because of the natural gas boost, this would help to assuage some of the problems with respect to feedstock that these companies have been facing, and we have seen some of that so far. The numbers don't give a convincing trend there, because it's more jagged rather than going up. Part of it is because you had some issues with on the methanol side because of maintenance and the earthquake and so forth. So it isn't convincing, but we do anticipate that the problems facing the petrochemicals industry would have been helped then by the natural gas recovery. So let me look at the non-energy sector. We do find that the spillover to the non-energy sectors is taking some time. It is not instantaneous. So when we look at the actual numbers, we look at non-energy activity, and the thick black line is the central bank's quarterly index of economic activity, which looks at production numbers. And you would see that, just looking at the path of that black line, that the depth of the decline in non-energy sector seems to be bottoming out to some extent. The issue is that how confident are we that this is a reversal of a trend? We have to be a bit conservative of this, because some of the numbers are not, let's say, convincing in one direction or the other. The construction numbers have been good for the second quarter, sorry, but some of the third quarter numbers are not so hot. For example, we had in the second quarter, the local sales of cement went up by 3.5% compared to the second quarter of last year. But in the third quarter, it went down by 6.5%. Then you have the same thing with building material prices have also been going up. So is it the start of a construction boom? We are not, at the central bank, are too conservative to say, well, yes, because the numbers are a bit iffy. We do see that, as I said, building material prices have gone up. The government construction projects have seemed to be taking a boost, so that could then lead to the private sector also taking its place. But we still see credit to the construction sector as a bit tepid, and even some of the non-performing loans there have been picking up slightly. So we don't want to celebrate too much, but we are looking at it very carefully on the non-energy side. And as I said, a lot of what happens in non-energy will depend not only on the energy, but the response of the private sector in general to the signals, and also the lead that is taken by the government in construction and other activities. So let me go quickly into some of the other aspects of the non-energy sector, in particular, inflation and unemployment. The unemployment numbers, we are reluctant to spend too much time on it because of the lag. The last numbers we have would be the end of 2017, which as a policymaker now it's a bit unsatisfying to be looking at those numbers from that far apart. It does show that the unemployment rate is still very low compared to the rest of the world, and in general less than 5%, from 5.1% in the third quarter. But again, when we look deeply into the numbers now, we see that the participation rate has also fallen. What is the participation rate? It reflects the amount of people that put themselves onto the labor force. And for some reason, less people are putting themselves onto the labor force. So when you look at a dip in the unemployment rate, it does not necessarily mean that you would have a huge boost in the number of people employed. But again, as I said, we want to look at that very carefully because it is lagged and there are other things happening that may not be on those figures. The other thing is on the inflation rate. And we've seen a remarkable decline in inflation in Trinidad and Tobago over the last, let's say, 24 months or so. And look, if you look at headline inflation, this starts from March 2016, and the highest number was probably 3.5 or so. This is low by any standards. And now, the last number I think we have is inflation is about 1%, 1.2% in September. This is year on year. Headline inflation and food inflation was 0. So things we don't have an inflationary problem. Part of it is because of on the demand side, part of it will be monetary policy, but this is the fact of life. What does that mean? It means that the value of our currency in local terms is not going down that much in real terms, but also when you look at it compared to the rest of the world, because even our trading partners, it is much less. The US, 2.3%, the Eurozone, 2.1%, Jamaica, 4.3%, and Guyana, 1.5%. So by any stretch of the imagination, we have a low inflation rate. And it means that for those of you who like to calculate our effective exchange rate, you would know that we would be not losing competitiveness because of an inflation differential that is higher than the rest of the world. So this is the brief story on the inflation rate. Let me go quickly to the fiscal situation. The main story that I'll put here, and then we'll explain it to some extent, is that better targeted transfers should help the fiscal position, but the shape of deficit financing will be critical. Now, all of you would clearly have been spending time listening to the budget presentations, analyzing the budget numbers, and so forth. So I wouldn't go into that. That is not our expertise, and we would be looking at the numbers anyway. But analytically, what do we see? We see that the government's fiscal position has clearly improved. Over time, the fiscal numbers reported have been a deficit that is less than the year before. So this is good news on the face of it. And then also, the projections are for continued deficits for some time, but fiscal consolidation over time. So the numbers portend a fiscal path that could be acceptable. But let's chat a little bit about this. One of the things that is a feature of our fiscal position, and partly because of the of our, let's say, our windfalls over the years, is that a lot of our expenditure is focused on transfers and subsidies. In a number of countries, this is not the case. So if you look at the graph, you will see roughly half It's actually a little more than half of the pie chart shows the expenditure. We just used the last fiscal year. And you would notice that most of this, slightly more than one half, is on transfers and subsidies. This is quite a large number. Other current expenditure is about 38.7%. Capital expenditure is about 10% of total expenditure. Now, for many years, there has been discussion, not only in Trinidad and Tobago, but in international circles, about the shape of this, this configuration of our expenditure. And transfers and subsidies could be beneficial. The problem is that sometimes it's difficult to reverse it. And also, if you're not careful, they may not be targeted to the right areas. So what the government's explicit policy has been is to consolidate on the fiscal front while adjusting target transfers and subsidies to make them more efficient, more targeted, streamlined, and so forth. So we think this is a good policy. It would clearly be something to, you may have challenges in implementation, but you could get a better bang for the buck overall. Because if you have transfers and subsidies to households, to whoever, you want to make sure that they are not dissipated to those who don't need it. So a more targeted, precise fiscal situation based on transfers and subsidies that are better and zero pinpointed to where they are best needed would give you better bang for the buck. So hopefully not only you would have a fiscal consolidation part, but a transfer and subsidy situation that is more sustainable and gives you the best output for what you want. Overall then, what does it mean? And what are some of the things we need to be aware of? Certainly at the central bank, we are looking a lot at the financing of the deficit, because once you have a deficit, as you know, in your personal situation, if you spend more than you earn, then you have to somebody has to give you the money somewhere. Your mother, father, whatever, whoever, you get it. Someplace you get it, you borrow it. Hopefully you don't steal it, but you do something to get it. So what I think, certainly on our side, that we spend time looking at the central bank would be the financing of the deficit, because these affect the financial situation, it affects the credit and so forth. So in general, we want to focus on a number of things. The financing in 4 areas. And this is a repeat of what we had discussed at the launch of the Financial Stability Report in June. Financing. You have 4 major types. Asset sales can help, but tend to be one-off. So a lot of the budget over the past years have been based on sale of assets, and we think this could be useful, especially if you think you could help to streamline, but you have to be careful that you cannot build this thing over time too much, because you wouldn't have things to sell all the time. So you have to build a budget that relies appropriately on asset sales. The second thing, external funding. This is potentially very useful, but unless you get grants, you have to be thinking that, wait a minute, I have to pay this back. So it has debt implications. It is not something that should not be used, but one has to look at all the implications of each of these things. The third thing is on central bank financing. Governments may borrow from central bank depending on their legislation, but one has to be aware that this could have monetary and financial and inflationary implications. So you have to be careful about that. And the fourth thing is domestic funding outside of the central bank. Again, this could be very useful, but it could lead to crowding out of the private sector and heightened sovereign exposures for financial institutions. If all your institutions say, well, this is the best game in town, let's invest in government paper, So you have to be aware of that. So the 4 points I mentioned there are not to say that there's no hope, otherwise you can't finance a budget anywhere. I'm just saying that when you finance it, you have to be aware of the side effects of each of these things and put it together. And particularly in a situation where we are now, you have to look at things very carefully, month to month, quarter to quarter, plan your budget, plan your financing so that you get the best deal. Markets are aware when the government is coming into the market, and you could then order your situation very well. Why? Because ultimately, continued fiscal consolidation towards balanced budget is required to avoid debt buildup, because we have to be aware that if you have a path of deficit financing, you would be building up debt over time, unless, as I said, you could asset sales or you get grants or so forth. But so it's something you need to be aware of. Let me go on to the last couple of slides, since we have, as I said, a long time to be together this morning. The fifth thing is on monetary policy. After all, it is a monetary policy report. So let me just review some of the things that we take into account at the central bank when we craft our monetary policy. Clearly, we look at the domestic situation, and we have the little circles there. The domestic situation, we look at inflation, I talked about that. We look at private sector growth. I mentioned it in passing on the side of the construction sector. But what we have found is that we have had a real increase in credit over the last year or so. Real meaning higher percentage increases than the rate of inflation. So this is somewhat good news in the sense that it is not overwhelming. You may not be getting into a credit bubble or so. But we still find that it is focused more on the consumer side as opposed to on the business side. So there has been some pickup in business credit, but it has not been stellar. So I think for whatever reason, the businesses are still a bit reluctant to leverage themselves. They may be a bit cautious and so. And it's something that we are looking at very carefully, but we are not in a situation of a major surge in credit that could create destabilizing problems. The other thing that we have seen is that an increase in credit for use of credit cards, that has been building up, debt consolidation, refinancing, and so forth, and for mortgage lending. Now, we don't think that the mortgage lending increase is really a surge in new housing or so forth, but it could really be people are taking the equity out of the existing houses, which had not been the case before. So there's the private sector credit side. We look at liquidity, we look at excess reserves. We would know that we had the National Investment Fund issue some time ago, so liquidity bumped up temporarily to take care of that, and it's gone down to more manageable levels now, about 3-point-something billion in May, October. So we do look at that very carefully. We look at, as I said, the real sector. I talked about the energy output and non-energy side. So the picture is that we have potentially some good news on the growth side, but it's still not, stellar. And then, so these are some of the domestic factors, but of course in Trinidad and Tobago, we have an open capital account. And so therefore, with an open capital account, you have to take into account what is happening on the international side. And the most summary of an indicator of this is your interest differential. What are your interest rates relative to foreign interest rates? And I did mention before, when I talked about the global setting, the concern about the normalization of the Fed's policy. If they lead to high interest rates in the US, it could lead to outflows of capital from emerging markets and so forth. So there's the same kind of thing we are facing here. So we have to look at what is happening in the Fed and elsewhere to see how our interest differential go. And we have found that our interest differentials have actually turned slightly negative, and we have to be aware of that, because then it could lead to potentially people investing their money abroad. But it is not, the life of a central banker is not that easy to say, well, okay, just mechanically do this and you do it. No, no, you have to balance this, balance that, juggle this. You know, it's like a whole set of stuff you always have to be doing every day, every minute. And that's what we're paid for, I guess. So we look at that. For over 29 months, we had, after a tightening cycle a couple of years ago, we held the repo rate steady. At the last financial stability report launched, you would have been mesmerized by the swinging pendulum. Well, then we have, so we increased the repo rate in June by 25 basis points in consideration of all the dynamics. We kept it steady after that because we are looking, balance everything. We had, and if you look at the Fed's latest statement, they also have held back an increase a couple of days ago. So they've not increased. We have to be looking at all those things. They may tend to increase later on. We have to look at everything and put our, decide on policy based on a careful analysis of not only what is happening, what is anticipated to happen, expectations, and so forth. So this brings me to the second point about how things feed into our system, or what the economists call the transmission mechanism. So we increased the repo rate by 25 basis points. Well, did this have an impact on our system? Our transmission mechanism, I say, tends to be very slow. It's more like not like a Ferrari, it's more like a Tida, I don't know. Anyway, so it's slow. It's slow, right? We chugging along, right? So what that means is that unlike other countries, you do something and it moves it swiftly into the system. It's taken a while, and we have seen some increase in both deposit and lending rates by some institutions. So we wait to see it. So what that means is that when we are crafting monetary policy, we would not expect that when we do something today, you would have an instantaneous effect. We have to look carefully. We have to see how it seeps into the system and so forth. So we are continuing to monitoring it. But this is just an explanation of what actually happened there. The other thing we have, we are continuously moving towards more market-based instruments of monetary policy. So our secondary reserve requirement, we removed that in around August, 2%, and that means we have to rely more on open market operations and so forth. And monetary policy will continue to balance internal and external considerations, because that's what the summary of what we will be continuing to do. So the last point on the on the macro situation is on the foreign exchange market. Where are we now? In summary, foreign exchange inflows have picked up, but we are not out of the woods yet. In a technical way of saying things. But so if you look at the last couple of years, on the graph here, the blue line would be the sales by authorized dealers, basically banks, to the public of foreign currency. The green would be what the purchases that the banks would have got from the public, and the red line would be the central bank intervention. Intervention meaning what does the central bank buy or sell, and in this case it would be sell, the net amount, sell to the banks or authorized dealers generally. And you see that over the last few years, let's focus on the green line. The purchases from the public by the banks, they've been slipping because of the macroeconomic situation and so forth. And you see intervention, we have intervened, and our intervention has been at a certain pace. What we see this year so far, we superimpose this, is that we have seen some pickup in the inflows of foreign currency to the commercial banks. So in January to October 2017, banks and authorized dealers in general purchased 2.8 billion from the public, meaning the energy companies and so forth. And in 2018, the same period, January to October, about 3.3 billion. So it has it has picked up over the course of this year. It has meant that the central bank has had to intervene less or sell less. So in 2017, January to October, we sold about 1.6 billion, and in 2018, January to October, about 1.3 billion. Again, now we have to be careful. The central bank clearly would be looking at a number of things, and we had gone through that, I think, last year when we were doing monetary policy, the implications for, or the components of monetary policy and what do we do and so forth. The intervention, however, has been positive in the sense that we've been selling more than we've been receiving. And so that this has meant that our gross official reserves have been declining or slipping somewhat. So at the start of the year, we had 8.3 billion in reserves. Now it's currently about 7.46 billion. Now, so we have lost some reserves, or our reserves have slipped to some extent over time. It is something that we are looking at very carefully. And again, one of the things that we balance. Now, some would say, well, why do you have reserves at all? And some countries say, well, you don't need to have reserves because you just let other things happen. Our reserves are for a rainy day, clearly. So over time, when we had $10, $11 billion in reserves, many were saying, well, you have too much reserves. But this was built up for a rainy day. If you look outside, you say it's raining. So we have been experiencing rainy days. So this is where the buffer comes in. And the buffer has been useful because a number of countries that have faced the shocks that we have faced without this high level of reserves, without a heritage and stabilization fund, as I mentioned, about 6 billion, they had to adjust immediately. But now we have had the time to be able to do a more orderly adjustment. Of course, we need to be careful because the rain comes over time too. So if you can't use everything because rain will come in the future. So again, this is something we need to always be balancing to be able to have a good path for our situation. Ultimately, now, and this is the last component of this, that you've been hearing me say over and over again, and I'll say it again, is that for our macroeconomic situation to have a durable macroeconomic situation, we must have an appropriate combination of fiscal, monetary, and structural policies. I wouldn't go into that in detail because I've done that before, and you know, if you want, we could explore it more. But just suffice it to say that on the fiscal side, it may depend on, since governments, and in particular in our situation, the government is a major player because of the size of the government, given that we are an energy economy, so that we get a huge amount relatively from the energy sector, then it is a major player. So what the government does affects the macroeconomic situation. So that's the basic storyline. So if you have a government financing issue, or the government is construction and so forth, everything relates to that. Similarly, on the structural side, the ease of doing business, the way we do things, that is quite important for our macroeconomic situation and resilience. I was last 2 weeks in Barbados at CARICOM Central Bank Governors Meeting, and a lot of the discussion there, and there was an excellent presentation by Dr. McIntyre, who's now at the IMF, and focusing on Caribbean problems, but a lot of stuff he talked about was the way of doing business is too sluggish because it takes too long to do everything. It takes a long time, and we could sharpen up on that. We could make things more streamlined, more ready, more appropriate to our circumstance. And this is what could help us when we have to adapt to the times. And similarly, monetary policy will have to take its place. As I mentioned, the fact that we have to be looking at domestic, international, and to be able to adjust our monetary policy. Monetary policy can't say it will do everything because let's say we jack up interest rates to the sky. Well, guess what? It could help your external balance, but it could lead to a growth situation that is, below the floor. We don't want that. So we have to be able to juggle everything and keep things together. So this is the first part. So thank you for this first part. We'll go directly into the second part after I drink a little bit of water. You don't have to clap now because we have plenty wood. Yeah, I good. All right. So let's go into a very interesting part of it. The second issue. The developments in the resolution strategy for colonial life and related companies. And I can't remember somebody asked me last time, how long are we going to be in CLICO? So maybe we'll have some discussion on that. So again, you have that in your slides. You could download it online, at your leisure. And the key points are here. So I will not spend too much time on this. Well, the key points here, we'll go through that. This one is a little longer than the last one, but I'll probably spend less time. All right. So why am I doing this? I want to be able to put things in perspective, because sometimes when you're embroiled in a situation, it's difficult to step back and say, well, where are we? What are we doing? How are we faring? What lessons do we learn? And what does this mean? So we have the opportunity now. It's basically a decade since we've had the issues, and it's a good time to reflect where we are and to see where we are going now. So this is the basic storyline. It is encapsulated in a whole speech, that is written in English, so you could read that at your leisure, and then so in case you have any specifics. But I won't read it. I will just talk about it, and then in the discussion period or afterwards, we could get into it. So some of the main points, and let's say how did this start? And in January 2019, the central bank received a request for extensive liquidity support.
2009.
What did I say? 2019? I'm thinking ahead. Sorry. Let me drink some more water. All right. In January 2009, the central bank, I was just testing you on that. The central bank received a request for extensive liquidity support from a major player in the domestic financial market. Okay, so we're talking about a group called the CL Financial Group. It's major because it had ownership or significant shareholdings in the country's largest bank, insurance company, and a large non-bank financial institution. The group also had material investments in a number of sectors, energy, spirits, and so forth, and controlled over 100 billion of assets in more than 50 companies. When it came to pass, the CLF initially warned the central bank of liquidity issues at CLICO Investment Bank and requested assistance in avoiding a run. So you have a problem at a bank, and this happens at central bank, lender of last resort, whatever, to help the situation. It turned out, however, that it was more than that. First of all, as I said, the company, the group is large. So on the left, you would see the graphics, and you would see all this, colors and everything. It basically shows the complexity and the reach. Okay. So now you say, listen, this is if this is more than a little thing, then you have to be concerned. It turned out that the difficulties were more fundamental and far-reaching than this liquidity issues in one institution. And it turned out that you had significant statutory fund deficits in Colonial Life Insurance Company and British American, right? Two of the companies that I talked about. Not only that, the various entities in the group were highly exposed to each other through related party transactions. Related party means that you give to your son, brother, aunt, uncle, tanty, nenen, or whoever, all of you think. But so if one person has problems, well, everybody have problems because the whole thing is related. So this is something that was important to know. For example, almost 83% of CLICO's assets were invested in related parties, with more than $4 billion in this institution, CIB. So this is a flavor of the story. Now, what happened then? The extent of the support necessitated intervention, and support and outlay and involvement by public sector agencies. So you have the government of Trinidad and Tobago provided support roughly around $24 billion, 17% of GDP. This is high by any standard. If you look at the US, this might not be a good example because the US is so large, but when they had the intervention of AIG, it was 1% of GDP and so forth. The savings and loan crisis, about 3% of GDP. But for us, is a large amount. But the fact that you had fiscal space allowed this to happen. Now, I'm contrasting this. I'm mentioning this because in many countries, you may not have that. If a country faced with such a huge thing, you may just have to, I don't know, let it unfold, let policyholders or depositors take the brunt or whatever. You may not be able to support this. We happen to have the fiscal space. The second thing, now I'm doing this very summarily, but you could see it in the speech or go through the history. Central Bank of Trinidad and Tobago, we intervened initially in CIB, and then also with our enhanced emergency powers in CLICO and BAT. So this is where we are now, the emergency powers section, famous section 44D. Then the Deposit Insurance Corporation also got into the act because CIB was put in liquidation. The moral of the story, or the thing that we have to be aware of, is that when we look at international experience, most countries have had some financial problems and major financial problems. It's a fact of life. They recur. You could do what you want, you try your best, and they fix one thing and it happens somewhere else. They may necessitate a big fiscal outlay, but sometimes the things persist, and here's where we have to be aware of it. Because of the increase in the public debt that may occur, as I said, countries may not have the fiscal space, so they have to borrow, they have to do something else, and the fiscal space is exhausted, and you have an increase in public debt, so there's something that the implications are vast, and also disruptions to the financial system that may persist many years after. So you have to be, these things could have long-lasting effects. Let me just go quickly into some of the background here. At the heart of the problems was a combination of poor governance, investment outreach, gaps in the legislative framework. So for example, you had the boards were meeting infrequently, a limited number of independent directors, audit and investment committees didn't function effectively, intercompany transactions, as I was mentioning, excessive asset liability management was not at the forefront of investment decisions, etc. And acquisitions were sometimes not of the value that one would have thought. Apart from that, the regulatory regime did not require that the level of capital held be commensurate in investment risks being undertaken. So you see there was a lot of things behind the scenes, and also the fact that things were large. It wasn't a small, entity. So let's just summarize what over the decade, because as I said, we are doing this to put things in perspective. We could identify 4 overlapping phases. First, initial control, assessing the true situation of the companies, short-term stabilization strategies, financial support. I mentioned the government amount that was put in. We had stabilizing the institutions, central bank management of CLICO, BAT, et cetera, and then also monetization of assets to repay the creditors, including the government. Because then if you provide all this finance, then you say, well, okay, let's see how this can be recouped. In many countries, you don't, it may just go in and not come back out. So but it's part of the overall thing. So, but at the same time now, the phases were bolstered by efforts to strengthen the legislative and supervisory framework. And so we've had major movements on the insurance bill side, and I must commend our parliamentarians for the work that they've been doing to get this thing through, this year. And we at the Central Bank are also working with the relevant people to wrap up the what you call the guidelines and what do you call it? Regulations. Guidelines and regulations to provide support to this. So by early next year, we should have this sorted out. So this, as I mentioned, you had the legislative deficiencies. This huge effort is paying off in that insurance bill, and we are working towards that. And some of the main features include more realistic capital positions, stronger governance, more risk-based considerations. And it would fortify the regulatory powers of the inspector of financial institutions. So this is, in a sense, the good news out of a bad situation. Now, broadly speaking, where are we with the resolution plan? The resolution plan is on track, and the risks to financial stability in Trinidad and Tobago have been minimized. In the sense that, as I was saying, you had this huge problem. You had a potential contagion effect because of its systemic nature. You had fiscal support that was large and that could have been gone to somewhere else. And so you have nervousness in the system. The way it worked out now, and we are at a situation now, and if you looked at our financial stability report, where and I won't go into all these details, but the banking system indicators, the insurance sector indicators are looking quite good. So we have a stable financial system, despite having had these problems because of the resolution strategy has paid off. Moreover, a substantial amount of the fiscal support has been recovered. I'll just focus on the case of CLICO. And the total support was in the order of about 18 billion. I had mentioned CLF overall, which is larger. And the total repayment by CLICO so far has been on the order of 14 billion, of which a not unimportant part, about 3 billion, has been recovery from the Deposit Insurance Corporation. As I said, they were in charge of the liquidation, and there was a major payout of about 50-something cents on the dollar earlier this year. So that has helped in the repayment by CLICO to the government. So all in all, now you have just about 22% that is still owed by CLICO back to the government. So what does it all mean? Oh, and the other thing now is that the sale of the traditional portfolio of CLICO is progressing. Now, in delineating the phases, one important, I'll say, point in time then was in March 2015 when the resolution plan was kind of elaborated to incorporate a few steps. One step involved the sale of the traditional portfolio to a suitable purchaser. Now, why would you do this? Of course, the central bank is concerned, as I mentioned, about financial stability, and in general, but also about the policyholders who would have put their confidence, their stake into the enterprise, the traditional insurance, the traditional meaning the universal life, term policies, deferred and immediate annuities, pension schemes, and so forth. So you needed to make sure that when you sort things out, these are well managed because they will last for a long time. People invest in a term or a life insurance policy and they are 20, 30, and their life expectancy is whatever, 80 or whatever, this thing would last for a long time. You don't want things to be shaky. So the plan that was adopted at the time was to sell the traditional portfolio. Now, this has been, over the past few years, there has been a rigorous process to effect this, involving international companies that would help in evaluation and analysis, assessment, and so forth, with CLICO, BAT, and central bank oversight to identify a preferred bidder to acquire and manage the business. And this has been successful. A preferred bidder has been identified. Now the lawyers are tidying up the paperwork, and we expect that what you call sale and purchase agreements to be finalized. And then once you sort that out, then they will work to get the necessary regulatory approvals. The transition period now for moving the CLICO and BAT portfolios to the new company would take several months, and during which time CLICO and BAT will continue to manage the portfolios until the transfer is fully complete. So you could look out for the announcement of the details, as soon as the paperwork is sorted out. This would pave the way for central bank exit from control over CLICO and BAT once conditions are appropriate. Step back in time. Why did the central bank do it? We are not in the business of managing insurance companies, but it was important to assume control of the companies in the interest of policyholders and financial system stability, as I mentioned before. But it is not something we want to do over time. It is not our expertise, our area, and not really our long-term objective. So as I said, the next steps now, once the paperwork is sorted out and what I call the sale and purchase agreement, then you have to prepare, according to the law, something called schemes of transfer to seek regulatory approvals for the transfer of the policies from CLICO and BAT to the buyer. So that will take some time, and you have to get, it's another round of details, discussion, and so forth for this to happen. Last slide on this one. So overall now, where are we? The stronger legislative apparatus and integration of the lessons learned would help to further fortify supervision. With the implementation of the new Insurance Act, the local insurance industry will be subject for the first time to a modern risk-based approach to capital, actuarial valuation, and other aspects of insurance supervision. So this is a game changer. And I think we are ready for it, but we still have a lot of work in our own area to do. We have to be ready for the task. We have to up our own game and be ready to move things along. I remember in the debate, I think it was Senator Tiwari had talked about the importance of the central bank being ready for the task. Because now that you have the power, you don't have an excuse, so we have to do what we have to do. So we have been working very carefully on this and engaging in technical support, discussions, staff training, appropriate recruitment, strengthened interaction with local and external regulators in order to be ready to do what we have to do. It is a task that we are prepared to do, we are working on it, and we'll continue to fortify our own structures and capacities in this area. And then just the last point, within this context, as I mentioned, I believe in June when we last met, we'll be having an IMF World Bank Financial Sector Assessment Program in 2019, which is something that the IMF World Bank come together and discuss with different countries, different aspects of the financial system. And so this could also help us to further advance our capacity on insurance supervision. So this is the end of part 2. And you don't need to clap this time because we have some more to go. But you could clap if you want. All right. Thank you. So, financial technology and virtual currencies. Again, I wouldn't go into too much detail here. Our Deputy Inspector, Michelle Francis Panto, has been talking about that at the last conference we had, and recently, I think it was ICAT, and Mrs. Barrett had been talking to that with different groups, including yesterday, I think, with the Tobago House of Assembly, their financial literacy program. It's something that we've been taking very seriously. For example, in July, we had a conference here at the Central Bank, a regional conference with the rest of the Caribbean central banks to talk about this thing in detail. We had representatives from presenters from Germany, Mexico, European Central Bank, a whole set of things. It was very rich and enlightening discussion. At the CARICOM governors meeting recently, we discussed it in detail because, you know, we're trying to coordinate as best as possible. We had papers led by Garnet on a Caribbean economic research team which incorporates the central bank research directors of the Caribbean region, so Garnet and Reshma and a number of people who are working on that. So that paper is complete. They also have what you call a fintech working group led by the Deputy Governor of the Central Bank of Jamaica to look at all these things. And we are also part of a Latin American working group on the area. So we have been discussing this. Most recently, the IMF and World Bank came up with, in Indonesia, with what they call a Bali FinTech agenda, for those of you who may have been following it. But basically, it's looking at a framework for the international community to assist and to set a framework for individual countries move towards virtual currencies and adoption of financial technology and so forth. So it's a very rich discussion. And so, as I said, I won't go into the background. We've discussed that a lot. But just to say that culminating out of this, today we are issuing, well, I guess in papers tomorrow, our statement where our current position is, the central bank's current position on financial technology and virtual currencies to provide a guideline for people. So you could look out for that. It's on our website already, and you could look out for that on the newspapers. And so tomorrow, maybe tomorrow. Right. So it is a simple statement, but it captures our perspective. And these are the points. The first is that the central bank welcomes technological developments that strengthen efficiency and financial inclusion. Because the way things are at now, you can't be behind the curve, otherwise you just get left behind. So we want to be part of understanding it. We have the chairman of the IFC here, and he's all excited about this. We are discussing it. We want to embrace the technology. First of all, we had to understand it. We had to spend some time doing it, but we embrace technological developments that strengthen efficiency and financial inclusion. Because in a number, well, first of all, to be competitive, you have to be at the cutting edge. So we need to be at the cutting edge. Secondly, you want to make sure that financial inclusion takes place. This means that those individuals and so forth that may not be able to participate in financial transactions for whatever reason. They may not have a bank account, they may not know how to read or whatever, they could get involved easily. So the new technology offers possibilities for that, as well as making things more efficient, reducing errors, and creating things that buttress the stability of systems. So we have to be at the forefront, and we welcome these things. We are committed to engaging with fintech companies to understand the possibilities and application to the domestic financial institutions and the bank itself. We are aware that we will not know everything, but we are prepared to engage, try to understand, try to keep up, try to figure out, well, what is in it for our financial system? What is in it for the central bank? What is in it for that could help the community? So this engagement would be part of what we are doing. We will discuss with licensed financial institutions how they are adopting fintech and their plans to address risk and consumer protection issues. Because we have to be aware that if financial institutions do it, we are a regulator, supervisor, we want to know. We want to know, how are you doing it? Is it well managed? Could it create problems? Could it create consumer protection issues? Would it be too risky? So that kind of engagement, we certainly wouldn't want to hold back things, but we want to understand it. So this is part of the engagement with financial institutions that we'll be doing. The fourth point will be the bank will engage with companies wishing to provide new financial products, for example, virtual currencies and distributed ledger technology, to assure that the framework for the conduct of such activities is well established. There are a number of companies that have already approached us, that are approaching day by day. We want to make sure that we understand what is being done, we can assess, we can engage, and we can see what's happening. For some reason, well, the jargon has turned out that they've called this a sandbox. I don't know why they call this a sandbox. They say you have a sandbox. And I think it means that it's a kind of protected play area for people. You know, you have children that could build the castles, but you're watching them. Anyway, so we will have this arrangement where the companies, we discuss with the companies, and we have a testing environment that could be managed. And we say, well, how exactly would this work? Let's discuss it. Let's see how we do it. And let's work it out before you launch it to the public. So this is where it will take some doing on our part. We have to strengthen our own understanding and engagement, but it's something we are committed to doing, building this kind of arrangement so that we don't hold back the products from the public necessarily, but we understand it and we're able to discuss things, including your risk management, your governance procedures, and the way you deal with consumer issues, redress, and so forth, and that you have appropriate financial backing in case of problems. All of these will be components of the effort to move things forward, because we do recognize that, and if you look at the fintech, the Bali fintech agenda, it does recognize that in many countries, some things are covered by existing regulation, and also existing ways of doing things, but others that are not covered because they are not envisaged. So we want to be open, we want to be transparent, and we want to engage to understand these things. With respect to virtual currencies, the bank, however, strongly cautions the public on certain aspects, because you would see things that are coming up, what they call initial coin offerings, invest in these things, but then you see sometimes it goes up so, and then it just plummets so. Say, but wait a minute, I didn't realize that. Well, you know, it's a risk. So we want the public to be aware of certain risks and certain things when you may be thinking of this. And we have been chatting with our colleagues at the SEC on this area, because part of it, and a large part of it, is actually in their domain. That the investments could be very volatile and risky. So first of all, you need to know that. It's not necessarily a one-way ticket. So you put things at your risk. The transactions may also facilitate money laundering, terrorist financing, and other criminal activities. You have to be aware of that. And for those who are in the FIU and those things, you need to be aware that these things could come into play. Investors will also not have the backing of deposit insurance or financial supervisory agency in case of problems currently, because as it is now, you have a deposit insurance corporation, you invest in, you put your money in a certain financial institution, a certain amount is covered, you say, well, right, that I'm exposed to above that, but I have some coverage. In these cases, no, you don't have that. So it is an awareness that people need to be sensitized to, and this is part of our job. Then question about a digital currency. Some countries, some central banks are already saying they want to have a digital currency. We do not consider this a priority for the central bank at this time. I would urge you to look at our strategic plan. We have a 5-year strategic plan. We've just finished 40%, 2 years. And we already have a bunch of things in it. And the staff is complaining that I'm adding more. But that's all right. They enjoy it. But for this financial year, we do clearly want to understand it. So we'll spend time understanding, but we will not be spending time trying to launch it. Perhaps in the next financial year, when we understand a bit better, and we think that is a priority, we could get into that area. Given the size of virtual currencies, we think we have a lot of things to focus on, and this would not be a priority at this time. So, thank you. So, last subject. All right. Okay, now, so stay with me, people. We're almost there. The launch of the Market Conduct Guidelines for Institutions Licensed under the Financial Institutions Act. Now, why are we doing this and what does it mean? Again, I won't go into too much detail, but just to talk about the issue of financial consumers and protection. It is an important matter because, how should I put it? In general, the balance of power may be tilted to financial institutions, to providers, because they have more of the money. You have a little kakada, to put it in technical terms, and they're a big financial institution. So you have to have some apparatus for protecting consumers. What are some of the basic foundations of this? The first we think is legislation. A legislative framework that may include certain provisions and so forth. A lot of countries have this, and we have certain elements here. I'm just giving a broad thing. The second thing is institutions. Some countries, they have financial services authority. Some countries have a market conduct board or whatever. Different countries have different things. We need to be part of that. So the second building block is institutions. And I'm going through these things, but it's the things that I had mentioned already some time ago when we had a joint select committee on the matter, but I'll explain that shortly. The third thing is supervision, regulation. Supposed to be regulation, but registry. This would be it could be the central bank, it could be some other agency to say, well, monitor how things are going. That's another building block. The fourth building block would be market conduct. How do institutions organize themselves? What codes do they adhere to? What codes do they think? What principles do they adopt in dealing with the public? What ethical behaviors do they manifest? And how is this enshrined? So that's important. And the last major component would be education. You must have an educated financial consumer. Otherwise, they would not know the product, they would not know the risks, and they would not know how to deal with problems. They may say, well, okay, well, I can't do anything. No, so these are the 5 building blocks for financial services consumer protection. Now, let me put our market conduct guideline into context and just elaborate a bit on some of the features. So the market conduct guideline that we're issuing today is applicable to licensed commercial banks and non-bank financial institutions. Because we have the laws, we have Financial Institutions Act, and these are the guys that there. So it is something that is an actual guideline, a formal guideline. You may say, what about insurance companies? Well, remember I talked about under the CLICO presentation, the new Insurance Act being avant-garde. Well, it already includes a component dealing with insurance companies' code of conduct. We certainly at the central bank would recommend that the principles be applied to other financial institutions, such as credit unions or whatever. They should be prominently featured on financial institutions' websites. This is the the guidelines so everybody could see and everybody could say, listen, you need to conform to this. Our Financial Institution Supervision Department, Market Conduct Division, will be reviewing compliance with this. So depending on your on-site inspections and so forth to make sure that things are happening. It also complements other actions of the central bank in the area or in certain areas. For example, financial education or National Financial Literacy Program, which you would be aware of. Transparency. We publish the individual banks' fees and charges, and I understand the third one is already on the website. So you have a 3-year run of commercial banks' fees and charges, and you can make comments if something seems odd or so. Information. Some of you may or may not be aware of our mortgage market reference rate and the guidelines, where you could find it on our website to guide certain things and to have transparency in mortgage market things. And redress. Of course, our Office of the Financial Services Ombudsman, the only one in the Caribbean and other Caribbean countries are asking us, how do we do it, and could they do something like that? So in case someone has problems with certain aspects of their dealings with financial institutions, they could come to the Financial Services Ombudsman to discuss these things. So market conduct features in all this thing. Now, let me talk about, before I get into the guideline itself, Trinidad and Tobago. Clearly, we are a very sophisticated society. People are aware of everything. People are very in tune with things. And there are sometimes concerns about certain issues. One of these concerns was manifested in the establishment of a joint select committee under the chairmanship of Senator Choate. And they met last year. Well, I had to appear before them. It was like, I want something. I remember it was a Friday, and it was around Carnival because I went to All Stars Pania that night, so I remember to recover. But anyway, something here. I'm with it. Yeah, so you need to find it. All right. So in that, at that select committee, it was a very fruitful engagement where the parliamentarians, were asking me about how do we do these things, what are the gaps and so forth. So it was a really important engagement for us. I think the commercial banks also, appeared before them, and there was a lot of interest. The committee has had drafted its report, and so I leave them to determine how they're going to proceed. But as I said, we at the central bank have a number of components already in the last bullet point in it. So today we are issuing the guideline. And just briefly now, you have the guideline in your package. It includes things on an inclusive and competitive marketplace where consumers can easily find affordable products and so forth. They can easily change products and switch service providers. Suitability. Consumers are offered the product best suited to their needs and financial capacity. Transparency and marketing. This is important because consumers must be informed about the product. They are not misled. So you say, well, something is 5% interest, but when you calculate it, it's 15% or 50% because of how, so truth in advertising. They're able to compare the nature, value, and cost of products and make informed choices. Professional ethics and standards. Consumers are served according to professional ethics and acceptable standards, and professionalism and ethical behavior of staff when addressing customers' complaints. Due care, where customers are treated fairly and so forth with diligence over the entire duration of the usage of the product or service. So you shouldn't just say, well, all right, I want you to do this product, and they treat you nice, and then after a while, you say, well, you're already inside, so we don't have to worry about you. Safety and security, consumers feel protected from harm and so. And then the last point was customer education. Banks and financial institutions that have mechanisms to inform and educate consumers. So these are some of the components. The financial institutions have warmly embraced this. And because it is part of their own code of conduct anyway, because they have a code of conduct or code of practice, this is just kind of formalizing it. So we look forward to their collaboration and explanation to the public, and so that we have a more protected consumer, a more educated consumer that could affect financial stability in Trinidad and Tobago. So thank you very much for your patience.
Thank you, Governor. So now we'd like to just invite you to raise any questions that you might have. You see the microphone there, and just come forward and ask your question.
First question. Second question I have is in relation to the crude prices. When you look at the market fundamentals, you will see if you peel away the geopolitical risk, there was always building up inventories, and with crude prices going a little higher, U.S. producers were always going to increase production, and therefore, do you think that the $65 a barrel is in fact ambitious? And to what extent would you add on to the WTI prices today, bearing in mind that some of those prices are discounted because of the challenges at Cushing due to the increased production of crude oil?
Yes, thanks for those questions. The first one is quite tricky in the sense of you're talking about public choice and where do you devote expenditure. Both aspects are important. Capital expenditure. In general, investments matter because they create the capacity for future growth. So I think to the extent possible, I think any government should prioritize capital expenditure, particularly capital expenditure that not only is based on infrastructure, but develops the capacity of the country to do things in the future. So education and so forth. That's important. Now, the tricky part of your question is, should you take that out of transfers and subsidies? And here's where the public choice question comes in. Because transfers and subsidies, as you allude to, by their very nature, could be consumption items that you are dealing with immediately, as opposed to capital items that affect you in the future. But guess what? You have to live today. People have to go to the hospital today. People have to pay their bills. People have to take care of their disabled children. They have to do these things. They can't wait for the investment in education for the future. Yeah. All right, I'll try to figure it out. I'm not too clear on the exact thing, but let me try to figure it out. So I think the public choice issue is one where you have to prioritize still the transfers and subsidies, but again, focus it on the important ones, the ones that are in need, as opposed to things that are not, or people that don't need it. I think, and when I had mentioned the question about the structural issues, there are potentially very large areas where there could be waste occurring. So to the extent possible, I think the first priority of governments, including this one or wherever, should be to look at areas that are not productive, that you could get a better bang for the buck, that you could reduce waste, that you could improve, and then you work from there. I had given the example about the debt. If you have high debt, then you have high interest to pay. So to the extent that you could consolidate and remove from that, then I think you would be better off. So to answer your question directly, I think I would say transfers and subsidies should be targeted to the best. You should try to preserve capital expenditure, one. And then the inflationary impact, it depends. I don't think that inflation would be more, for example, if you put it on appropriate transfers and subsidies than if you put it on wasteful expenditure. In fact, it could be more. So if you could get the best of both worlds by transferring or moving expenditure from wasteful areas towards productive, targeted transfers and subsidies to the needy, then you would be best served. With respect to the crude prices, well, this is $1 million question, which really relates to, can one project the price of oil? And we, at the central bank, we tend to be very conservative, and our position is that we should not believe that the good times will last or that oil prices will go up forever. But we don't know. We've been wrong before. Oil prices have gone up. I think what our perspective would be that you take that as a windfall, but you don't build your future on it. I cannot say if the $65 or whatever was appropriate. It did seem so at the time, but we have to see, because as I said, in the case with OPEC now, with the problems with Saudi Arabia and then the US, anything could happen. We could find tomorrow that we are $100 a barrel, or we could find that we are 40. We don't know. Our advice would be to be conservative. If you have a windfall, you use it, but you don't necessarily build your future on continuous increases. Please.
Good morning. Good morning, Governor.
Good morning.
Some questions on the CLICO resolution. As chairman of the DIC, do you have a sense of the total amount of money paid by the group to the government? So you mentioned...
Sorry, which group?
CL Financial.
To the government?
Yeah.
I don't think the DIC wouldn't have that because it's...
Okay,
you know,
so
it's
DIC is in charge of
CIB. Yeah.
Which would have made payments.
Yes.
Yeah. Both the government and to CLICO.
Yes.
So you gave a number for payments by CLICO to the government.
Yes.
Both in assets and in cash.
Right.
What is the global figure?
How much does the CIB owe to?
No, what is the global figure that has come from the CL Financial Group to the government, or gone from the CL Financial Group to the government?
Let me take that one first. I would not know all of those things. What we put in our table here would be the CLICO BAT. So you see that at about 18 billion. The total amount owed, about 14 billion, would have been paid back so far. And then the DIC would have a certain amount that would have been owed to the government and owed to CLICO. The rest, I wouldn't wouldn't know all the details of that.
Right. So you gave information about CIB to CLICO, but not CIB to government. So if you could.
I'm not sure if we could see, but it would have been. I think it was about $1 billion that was paid back.
So in total, 14 plus 1 plus 2.9?
No, the 2.9 is part of the 14.
Right.
Yeah.
So in total, 15?
Well, if you add those two.
So what is the central bank's plan to recover the 4 billion? And if you could say, what is the government's plan to recover the 9 billion?
Well, the second part is easy. I can't say because you have to ask the government of that. The central bank, as I said, in the resolution, in the evolution of the thing, you had different phases. And part of it was financial support. We are dealing with the CLICO part. And to the extent possible, our first order of business is financial stability. This is why you have the components of the sale of the portfolio and so forth. To the extent possible now, then as I mentioned in the graph, one aspect of it, the last part, would be the recovery of assets. So, to the extent possible, then the monetization of assets, which has already occurred, would continue on that. The DIC's part now is as a liquidator. The DIC has done a great job so far, given more than 50% of the credit that was due. And so that's about it. The DIC will do its part. But on the CLICO part, it is anticipated that most of this will be repaid. Most of the other 4 billion could be repaid.
So would that be from the sale of the traditional portfolio or from the sale of assets in CLICO?
It could be from anything. From both then. Let's put it both.
Okay. And you referred to a preferred bidder being identified.
Yes.
After more than 3 years.
Yes.
So you probably had a long and very diligent search for that preferred bidder. Can you say whether that bidder is local or not? And what is the consideration that is being put on the table for that traditional portfolio?
The consideration meaning what?
Meaning the amount of money that... That's generally what consideration means.
As I said, you have the lawyers involved in this thing, so any announcement on the name and the characteristics and the price, that would be, it's a what do you call it, a private transaction, so I would not be able to say that.
Private?
Yes.
Oh, how is it private?
Well, listen, you asked about the process. The process would involve bidders that would bid based on a certain set of rules, which part of it would be confidentiality. So in the spirit of confidentiality, I would not be able to say.
Okay. Thank you.
Governor, good morning to you. And
Good
to
morning,
your,
sorry.
and to your head table. My name is Kyle Saunders. I'm calling from I-95.5. Now, you mentioned that the foreign exchange inflow has picked up. How does the central bank intend to deal with the issue, or is there a rule for the central bank in dealing with the income tax bill, and which, if not passed, in the parliament seeks to, quote-unquote, blacklist Trinidad and Tobago and could end up spelling disaster for local banks?
Yes, thanks for that important question. Let me generalize. De-risking is an important and very real fact of life. And what do I mean? If the international community or a big international bank also finds that your country or your institution does not follow certain procedures, then it will say, well, I'm not doing business with that country. We have signed on to certain conventions, including ones that are related to information sharing, terrorist financing, money laundering, and so forth. And we have committed to do certain things. So in that sense, to the extent that we don't do those things or don't demonstrate a certain advance, then countries will say, or the international community, well, I don't need to do business with you because I will do it with another country. So it is quite serious and important in principle. Now, the other point I think that is important to bear in mind is that when these institutions or countries or banks look at a country, they are not interested or sympathetic to your internal situation. How do you sort it out? They just want you to sort it out. So I think with those two factors in mind, I think I wouldn't comment on the specifics of the income tax bill or whatever, but once it satisfies the requirements that we have already committed to, that would be important. And I think we need to do that because we will be left behind. You will find that you have a list, and before you know it, we are the only one on the list. We don't want to be like that. So we just need to sort out ourselves. We may have different possibilities which we should explore, but we just have to get things sorted out so that we would not be in a situation where capital and confidence moves away from Trinidad and Tobago to somewhere else.
But do you intend to hold talks with members of the opposition? Because well, I think not, but and interested parties, because the Attorney General and the Minister of Finances saying that they are the persons that are, quote unquote, holding back the passage of this bill. What then is the central bank's role in all of this, is what generally I'm asking.
Well, as I said, I mean, we give advice. We explain how important de-risking is, how important it is to conform to international standards, and how important it is to sort things out as quickly as possible. We think it is the role of the different bodies that engage with each other, including the parliamentarians, to do so, to come up with a solution that best suits the situation. I mentioned the insurance legislation, and I did mention how we commended the parliamentarians for working on that. I think in the spirit of that situation, we would anticipate that something would occur.
Thank you, Governor.
You're welcome.
Thank you very much.
You're welcome.
Governor Hilaire, you have presented to us a very decent sense of the short-term Trinidad and Tobago economy. Low inflation, some growth, decent reserves, and so on. My question is there any aspect of the macroeconomy, of the fundamental economy, that worries you? And what might that be?
The structural, in the sense that I think that we are we are underperforming in our sharpness of doing things. I think we need to be, as a country, more precise in what we did. This is my personal opinion, that we could do things faster, we could do things more in a more agile fashion, and we could do things in a way that puts us at the cutting edge. I'm just repeating some of the things I said, because the world does not operate at a leisurely pace. Things move in a hurry. If you go for those of you who go on Amazon and you buy something, you say, well, you know, you look at the reviews. You say, well, it's not, you can't buy it here, you'll buy it somewhere else. Everything is being monitored. People are looking at everything you do. And here is where the young gentleman's question comes in. If you have something that is ticked against you, irrespective of if you have a good reason, they just look elsewhere. Because why not? You have others who have an easier and potentially more credible path, and people move elsewhere. So I think that would be the thing that would concern me, that if we are complacent, if we think that you know, we could move at a leisurely pace, then we would be left behind. So I think we have a tremendous potential. As I said, we are sophisticated people. Trinidadians and Tobagonians could work anywhere in the world and excel anywhere in the world. We have a culture that is amazing. We have creativity that is without bounds, and sometimes in some very strange areas, but we could come up with something. We are charming also. I mean, it might seem strange I'm mentioning that, but I used to work at the IMF. People love to come to Trinidad and Tobago because it's so charming. People are so we have a lot. But if we don't move things forward quickly, then we could be left behind. So that would be the one I would think that I would be concerned about. Not our intellectual capacity, not our ability to solve problems, but our potential, you know, feeling that we could just move at a slow pace. We don't have the luxury of that.
Governor, the former central bank governor of Barbados, Dr. Worrell, has indicated in his report on Trinidad and Tobago's economy that he's projecting that GDP growth would be affected next year because of the closure of Petrotrin refinery. Do you agree with him? And if so, if not, what sort of impact does the central bank see the closure of the refinery having on the economy? Another question is, you mentioned that you don't want to celebrate just yet, given the indicators you've seen regarding the construction sector, but as we approach an election period come next year for 2019, and is a period where the government usually picks up with regard to construction activities, do you see a construction boom maybe mid next year, and which will sort of create some sort of economic boost at that time?
Okay, thanks for very important questions. On the Petrotrin story, it is really a question of the numbers, in the sense that conceptually speaking, a restructuring could have benefits. Any restructuring. At the central bank, we don't have the numbers. We don't know what would be the associated costs of restructuring, either in the short run or in the medium term, because you would have some restructuring. You have labor moving, you have, you might have to reorganize accounting systems, all this thing. We don't know exactly the projections for the income and expenditure and so forth. So as I said, conceptually, it could work. And it could be beneficial in the long term. We do anticipate in the short term you would have some costs, because any restructuring involves costs. But we are not aware of the details of the numbers, so that it would not be right for me to say that I know whether you would have an increase in GDP or not, because scientifically you would have to get the numbers to know. So we just don't have the numbers at the central bank, so I can't say more than that. All I could say is that conceptually there are aspects that could work. We think that in the short run you could have some adjustment costs, but I would need to see the numbers concretely and analyze them and interrogate them to see their realism before making a judgment. On the second aspect, on the construction side, well, I really can't say. I haven't seen the budget for next year. I mean, the next financial year, which is, you mentioned, I guess, 2019-20. So I really wouldn't be able to say what would be the shape of it. So I can't, it would be hypothetical. I could say that in principle, construction could help to boost a number of things, especially if it is on much needed infrastructure, if it is on roads that create productive capacity, because you may actually have, you know, roads that are not performing well or dilapidated, and then transportation costs become less and so forth. Or they could be roads that are in underserved areas, underprivileged or so forth. It could affect the traffic situation to the extent that traffic improves and productivity improves also. But again, sorry to give a potentially dissatisfying answer, but I wouldn't know, I wouldn't be able to comment on something that hasn't happened yet.
When do you expect to get the Petrotrin figures? Are you waiting from the Ministry of Finance for those?
I don't think they're anticipated to give it to me.
Are you going to ask them for it?
Well, we are very interested. And I see these guys here. You look around, all the people with the sharp eyes, sharp beady eyes from our research department. They look for everything. So we would try to understand as best we can, because it is important. We would try to appreciate as much as we can, and do our best, because our stock in trade is information, and we not only take information, but we analyze it, and we interrogate it, and we beat it around and so forth. So we will continue to do that. We'll try to get as much as we can. We are already trying to understand it, but we also know that there are gaps and things that we don't understand. So as best as we could, we will try to get and you know, report it as faithfully as we can. Sorry?
Good morning, Governor, and good morning to the head table. Janine Brown, TTT News. Governor, Janine, yes. Governor, the Finance Minister has given a promise to balance the budget before he leaves office.
The what minister? Sorry?
Finance Minister.
Oh, finance, sorry.
In your opinion, is this short-term goal achievable? And if it is, given the present reality, what is the extent of the work that will need to be done to do that? And also on virtual currencies, I know you said it's not a priority of the bank right now, but just wondering, has the central bank through the FSO office received any reports from citizens who have used the system and encountered any level of difficulty?
Is it? Okay. Yeah. With respect to the budget balancing, it is achievable. It could be challenging. So 1, it is achievable. It could be challenging. 3, it depends a lot on what happens to external factors plus tax administration. External factors. I mentioned the energy prices. Depending on what happens, we could find ourselves in a very comfortable position. But of course, we could find ourselves in a challenging position if it goes south. So part of it depends on what happens externally. On the tax administration side, a lot depends on, once you have a range of taxes, if revenue is challenged, you have to make sure you collect that. So depending on the efficiency of that, because by all metrics, we still have potentially a lot of tax avoidance in Trinidad and Tobago. In many countries, for example, in the US, you know, a lot of the big people get away with almost anything, but the taxman grabs them and they go to jail for whatever. We don't have that culture here. So tax administration is something that needs to be sorted out. The challenging part could be, of course, if you don't have the revenue support, then what do you do? Again, come back to the question, the first part, what choices do you make? Do you control transfers and subsidies? Do you reduce capital expenditure? So these are very difficult choices that may need to be made. So it is possible, it could be challenging, but it all depends a lot on the other factors, including the external environment and the tax administration, as well as, of course, the public choice related to the expenditure. With respect to the virtual currencies thing, we have not had direct reports on any problems being envisaged at all. I was amused because one of my young staff members came and educated me on his investments in all these things and showed me how to do it, and so I didn't know how to do it. But the point is that people are savvy at all levels. He told me his grandmother's doing it, and I said, wow, I didn't know that. This is how you use your wallet, and this is your checks. I said, okay. So I got my lesson that morning. So the implication was that people are searching for investment opportunities. They are savvy, as I said, Trinidadians and Tobagonians find things around. I alerted him to, this is potentially. He said, don't worry about that. I said, well, this could be risky. It goes up, and he said, but it will come back up. Okay, but you're on your own. Eh? So anyway, we have not had reports per se, but this is where we issue our thing that, and the SEC has also been on the forefront of that. You have to be aware of what you are getting into, and that potentially it is risky. It may not be illegal, depending on what it is, but it could be risky, and you have to be then aware.
But is that something that can be protected if a complaint is made to the FSO?
You mean if, let's say, somebody lost? No, definitely not, because the FSO's mandate is very clear. It really focuses, or the Financial Services Ombudsman focuses on complaints by individuals and small businesses based on services that they may have received from certain licensed financial institutions, the banks, non-banks, insurance companies, and so forth, and then they would come to the FSO. If you decide to invest in something of your own free will, and you may not have read the fine print, and the price of it goes down, and when you try to cash it in, you get 1/5 of what you put in, then it would have been at your choice. But you would probably have redress to the Securities and Exchange Commission of whatever the issuing country of the thing is. But it may not be more than that. So this is where it is important for people to realize what they're getting into and what support they have. As I mentioned, one of our cautions, the last point on the caution thing was that you don't have the backing of deposit insurance nor of regulatory institutions like this, like the central bank and so forth. If it is something that has been formally put out and then the SEC or something says it gives an endorsement, that's a different matter. But the main point I want to make is that people have to take responsibility for knowing what they're investing in, what the risks are, and how much their ability to take if the risk materializes.
Thank you, Governor.
You're welcome.
Thank you very much, everyone, for your time, your patience, your engagement. Governor mentioned it before, but I just want to recognize the teams in the bank who really worked diligently and passionately to make today happen. And it's always a pleasure working with those members of staff, and they're all in the room and all outside of the room now. Thank you. We appreciate you. I want to invite you to have some refreshments. It's not lunch, but refreshments as you leave, to wish you God's richest blessings. Media, we look forward to your coverage. Anthony, you took lots of pictures of us. We look forward to the coverage, and we just want to wish you the very best for the season. All the best, and thanks for coming.